If you are glued to your screen watching MACD crossovers, waiting for RSI to hit some magical number, or juggling 100 different indicators just to tell you when to enter a trade, I'm going to tell you something that you probably don't want to hear. You are already late. Because here's a cold hard truth about all of these indicators. They are all lagging. By the time they finally flash a signal, a green light or a golden cross or whatever it may be, the real move, the explosive one, the one that's going to make you money has already happened. And at this point, you're not early to the move, you're chasing. And in trading, chasing is a one-way ticket to blown accounts and frustration. But what if I told you that there is a way to be early to these moves, to see the footprints of the big money, the institutional players, before the regular crowd and the retail traders even know what's happening? Today, I'm going to show you 3 simple but very powerful price action strategies that you can implement right away. These are the strategies that I personally use and the strategies that have helped me become a 6-figure funded day trader. Just pure price action that will help you be early to these moves and not chasing it after it's gone. And by watching until the end of this video, you're gonna know exactly how to spot these setups and trade them with confidence. Let's get into it. Alright, so let's kick things off with strategy number 1, which is follow the big candle. Now, this is one of the most simple but overlooked signals on your chart, and it is all about understanding momentum and conviction. Think of these big candles as dominant statements from the market. These are not some indecisive little tiny doji candles. This is a candle that opens at one end of its range and closes strongly at the other end, leaving a small wick. Now this shows clear, undeniable intent. And more specifically, we are looking for these big decisive candles on the higher time frames. Because when these candles appear on the higher time frames, the more significant the message. A big candle on the 1-minute chart is just a tiny noise. It's kind of like the meow of your neighbor's cat. But the big candle on the 1-hour or the 4-hour chart, that is like the lion's roar. It's loud, it's clear, it's dominant. Now, when do these big candles truly become powerful? When they appear near a key level. This could be a major support and resistance, a previous high or low, a supply or demand zone, any area where you expect the market to have a reaction. When you get one of these massive conviction candles, pushing through or rejecting from one of these levels, it is not just a random occurrence. It is a clear sign of a higher time frame momentum. It's the market telling you, hey, this is something significant that is happening over here. And you already know that the big players are involved in that. So how do we actually trade this? If we have a strong higher time frame candle closure like the 4-hour or the 1-hour from these significant levels, I then drop down to the lower time frames like the 15 minutes, 30 minutes, and sometimes the 1-hour time frame, looking for a liquidity grab. Alternatively, I look for a very strong candle closure on the lower time frames from these significant levels. But I only do this when there is that big conviction from the higher time frame candle closure. This way, I use the higher time frame conviction as a bias and get an entry on the lower time frame from a safe zone. And I always put my stop loss below the liquidity grab or below that big candle from the lower time frame. Your stop loss should not be in a random place or based on your P&L or how much you're willing to lose, but it should be in a place where if it gets hit, your whole trade idea is invalidated. So remember this, if you see a big candle close, especially on the higher time frames, that is not noise. That is smart money showing their hand. And it is a signal that you cannot afford to ignore.
Here I come. Oh, here I come.
Now next, we have a strategy that preys on the unsuspecting, overly eager retail traders who haven't yet learned to read between the lines. This is the false breakout or the liquidity trap. Price is consolidating and moving sideways within a defined range. Everybody is watching the highs and lows and waiting for a breakout. And then it finally happens. It breaks above a previous high or breaks below a previous low. And all the breakout traders jump right in, chasing the move and thinking that they've caught the next big trend. But then almost as quickly as it broke out, the price snaps right back into the range. And that was a fake out, a trap. And this is where the term liquidity trap comes into play. When the price breaks out, it triggers all of those pending buy stop orders above and the sell stop orders right below it. It's basically collecting liquidity. The big institutions and the smart money need that liquidity to fill their large orders. They push the price just enough to trigger all of those stops and get their orders filled. And then right away, they reverse it right back, leaving all of those breakout traders on the wrong side of the market. While the retail is getting trapped, you, the price action trader, are fading that trap and trading the reversal. So how do we capitalize on this? You wait for the breakout to fail. Specifically, you want to see that price action snap out of that zone and close right back in within that zone, confirming the trap. And that is your confirmation. That close right back inside that range is your green light. And what I love about this is that your stop loss in these situations is so clean and so tight. If you are going short after a false breakout, your stop loss goes right above that high of the trap. And this gives you an excellent risk to reward ratio because your stop loss is so close to your entry, but still it is at a safe zone. And your target is basically to the other side of the range. My thing always is, and I've mentioned this in many videos, if you don't see the trap, then you probably are the trap. Now, our third and final strategy for today is consolidation near a key level. Now, think of this kind of like a tug and war between the buyers and the sellers. When you see price enter a tight consolidation, a narrow range, a buildup, especially near a significant support and resistance level, it's not doing nothing. These orders are consolidating and quietly building up and waiting for the right moment to unleash their true force. This consolidation being near a key level is very important. The longer that this tight range persists, the more significant that eventual breakout is going to be. So whenever you see these accumulations, it tells you that liquidity is being built up and the market is getting ready to make a decisive move. It's basically the calm before the storm. And you might ask, why is this such a powerful setup for us? Because again, it gives you such a tight entry with great risk to reward. When the price is accumulating in a small range, your risk is so clearly defined. If you're anticipating a move to the upside, your stop loss is gonna go just right below that accumulation area. If you're looking for a move lower, your stop loss goes just above the consolidation high. And this allows for a fantastic risk to reward ratio trade. For me, if the overall trend on the higher time frame is bullish, and I see this consolidation happening around a key support area, I'm looking for a breakout to the upside. If the trend is bearish on the higher time frames and the consolidation is happening near a key resistance area, I'm anticipating a move to the downside. Now, one thing that you have to be careful here is that this is quite similar to the trap in our strategy number 2. And the key difference here is the candle closures. So what you want to see to confirm a breakout is to actually see a candle closure outside of that consolidation level. Because the trap happens when the move goes out and there's people that are anticipating and jumping too early.
Look what I found in my pocket, look!
And the candle closes right back within the range. So that candle closure outside of the range is very important. So remember this, when the price is consolidating, it's not doing nothing. It's storing energy. Instead of getting frustrated and moving away from your chart, you need to be patient. You need to wait for the confirmation and for that energy to release. And then you go in and ride that wave. So there you have it, guys. 3 simple yet very powerful price action strategies that have been so key in my journey to becoming a 6-figure funded day trader. Look, you don't need any fancy indicators or complex algorithms or some supercomputer to trade well. All that stuff, it just confuses you and makes you be late to the party. The market is constantly giving you these clues every single day, and it's telling you its story. If you just learn to read the market and to listen, because in trading, price action is the only thing that does not lag. The MACD is a lagging indicator, the RSI is a lagging indicator, the EMAs and the SMAs are lagging indicators. Price action is the only thing that never lags. It is the purest form of information that you can get from the markets and is the ultimate leading indicator. There is nothing that beats pure price action. Your job as a trader is not to predict the future, but is to get really good at reading the language of the market and reacting to it when the time is right. Let me know which one of these strategies is your favorite, which one of them do you use, or which one of these you're going to be testing out on your own. Are you going to be hunting for those big candles? Are you going to be on the lookout for those sneaky false breakouts? Or are you going to be patiently waiting for those consolidations to explode? Drop a comment and let me know. And if this video helped you out at all, definitely go ahead and hit the like button, drop a comment, and consider subscribing to the channel. It might not seem much, but for a small YouTube channel like mine, this kinds of stuff really goes a long way. It might help the algorithm, of course, but honestly, it just keeps me motivated to make more of this type of content for you. So definitely consider subscribing to the channel. We are on our way to 1,000 subscribers, and I would love to have you on this journey with me. So until next time, trade smart, trade safe, and I'll see you in the next video. Peace.